Economists warn that the Middle East conflict could push Singapore's inflation higher in the coming months. They say the situation is still volatile and it's not clear how the crisis will unfold. The outlook comes amidst a rise in oil prices as Iran looks to block the Strait of Hormuz, a vital route for global oil shipments. Analysts say such a move could undo the moderation in Singapore's core inflation, which came in lower for May compared to April. Kate Lowe has more.
Tensions between Iran, Israel and the United States have reignited concerns of a broader conflict in the Middle East. Oil prices may well be on its way up quickly as fears mount over a potential closure of the Strait of Hormuz, a key waterway for global oil supplies. For now, there's no immediate impact on Singapore's core inflation, which excludes accommodation and private transport.
If the threat fades off over the coming few weeks, then we may be still in a period where inflation could still look relatively limited for now. So I think trend-wise, we're unlikely to see higher inflation from domestic pressures. So a lot has to depend on the external front and also on the supply side factors, whether there's any disruptions to the supply chains or from the oil exporters.
Core inflation eased to 0.6% in May, in line with market expectations, largely due to slower increases in food and private transport costs. It's down from the previous month's 0.7%. Electricity and gas prices also fell further, while retail prices saw a smaller decline. Despite rising global crude oil prices, the Monetary Authority of Singapore and the Trade and Industry Ministry expect imported inflation to remain moderate. That's because oil prices, though higher in recent weeks, are near last year's average. Government subsidies for essential services like healthcare and public transport will also help to dampen services inflation. Core inflation and overall inflation are projected to average between 0.5% and 1.5% this year. Beyond oil prices, other observers say there are broader concerns.
The more important impact, less so, is on energy market, would be on overall business confidence, consumer sentiment, whether hiring market would slow down, labor market condition would soften. That could put pressure on overall aggregate demand, whether it's in Singapore or the rest of the world. That in turn could put more downward pressure on overall demand for goods and services rather than just transport costs alone.
He adds that a spike in oil prices could temporarily push electricity costs higher before softer demand, driven by weaker global confidence, brings prices back down.